For workers, the wage growth we're seeing is at record levels, or at the levels we haven't seen since this series began in the 1980s. So the labour cost index is up 3.7% for the year. That's still behind inflation. That's sort of a direct measure of what an employer is paying for a worker in the same job. But perhaps a sort of a better measure of the average worker's wage is just basically what the average hourly rate is doing. That's up over 7.4% for the year. So that's actually running ahead of inflation. In the private sector, that wage growth was even higher, 2.6% for the quarter, 8.5% for the annual figure. When you step back, there will be people saying this is bad news because it is inflationary. It won't necessarily put more pressure on the Reserve Bank. It's in line with what they were expecting, but it won't do anything to stop them putting up interest rates. So for homeowners, it still looks like a really tough time coming with higher interest rates, but it's worth remembering that this is an extremely good job market, the best we've seen in more than a generation, and it's a good time to be a worker and a good time for young workers in this economy.
Look, what this does is point to a very clear picture that the global economy is slowing down, and we've been talking about that a lot. Our trading partners, some of them are looking towards recession. That will cause issues for New Zealand because we're an open trading economy and for people who live here. But think about the starting point that we've got. Today we have unemployment numbers at 3.3%. We have people in work. They are much better positioned to be able to deal with the global economic shocks than they would otherwise be. We have low levels of debt as a country. We still have goods that the world wants to buy from us. So yes, there are going to be challenging times for some households, some businesses. But as a country, we are as well positioned as anybody else is to get through this.
The unemployment rate has stayed flat at 3.3%. Some economists had thought that maybe it would be even a little bit lower, back to record lows. It still essentially means that we have a very, very tight labour market. It really hasn't moved much at all. It's a little bit surprising perhaps that the rate itself stayed flat, but yeah, economists are sort of pointing to things like people who are maybe studying or don't need to work coming into the workforce, which means that it's lifted the employment, but the unemployment rate stayed stable. So really what this means is that the economy is not slowing down yet. It hasn't slowed down. Businesses are bumping up against capacity. They obviously can't get workers. We've still got problems getting workers in across the border. So there is a real skills shortage out there. That is good news if you are in that market, selling your skills and looking for higher wages. It's not so good if you're trying to keep inflation down. If you're the Reserve Bank, it's going to be tough.
Thanks for checking out our YouTube channel to stay up to date with all the latest news from the New Zealand Herald. Click the subscribe button below or check out one of the videos here, and head over to nzherald.co.nz for more details on these stories and more.